Everybody, this is Ryan Mallory. Today I'm going to go through the charts, I'm going to go through some trades, and I'm going to go through the technicals that are in the market with some individual trades themselves, also with earnings season right upon us. We're going to go through some of those charts, how the stocks are reacting, like Netflix, eBay. So right off the bat, I want to talk about the S&P 500. This is the most important chart in terms of determining future market direction. Obviously, you have a rising trend line off of the December lows, still intact. Yes, we're seeing about 3 days worth of selling right now. I don't know if we end up in the red again today or not, but right now we are sitting there. 20-day moving average, so far it's holding up. It's tested it today, hasn't broken below it, so that's holding up. The 5 and the 10-day from yesterday and the day before did not hold up, so that's not a huge problem there. I mean, the 10-day did provide some support previously, but right now it's not. We haven't tested the 20-day moving average either since really like June 6th. But going forward, I think this support level here that I've drawn, going all the way from these May highs, this is what's going to be the key support level for the market if it cannot hold the 20-day moving average. If it holds the 20-day moving average, all right, this becomes a moot point. But if we don't, then right below it, we've got a key support level. It's the previous two all-time high levels that are connecting, making a solid support level. That can't hold. I think we come back down to this rising trend line here. So maybe it'll be a little bit more like a May sell-off without not to the same extent, but to a certain degree. All right, let's just go ahead and jump right into these earnings stocks, the companies that just reported earnings this morning or yesterday evening. First off, eBay, there's nothing here. I mean, if you played it going into earnings, you got in here at the lows here at 39, and then you were hoping for the pop. You got it. Hopefully you sold it before it gave up too much of the day's gains. I mean, it's still up. It's still up 2%. But I don't see any reason to buy the dip here. It's just back into this consolidation range. Yeah, there's nothing there for me to really like. Funky candle yesterday where it looked like it wanted to break down. And then today you've got a similar candle, just a little bit higher on the chart. I don't see anything there that's worth playing, in my opinion. Take Netflix. I think this one surprised a lot of people. I wasn't expecting it. I don't think I was expecting necessarily a push below the 200-day moving average, and also below this consolidation pattern that goes all the way back to January. I mean, it makes me getting out of Netflix for a small gain last month pretty genius, even though at the time I was kind of irritated by it, really. But yeah, 6 days of selling, and it's on increasing volume. I definitely wouldn't buy this dip yet. A lot of times these earnings blowouts where they just get hammered and they go way down, they take a couple of days to settle. I noticed that last earnings in particular, you couldn't just go buy the dip the next day just because it was down 11% like Netflix is right now. You need to at least wait another day just to see if it's going to settle, because a lot of times you get a follow through to the downside and then it eventually wants to bounce itself back up. I think Netflix has a lot of headwinds. I think you have HBO streaming services, Warner, you have Disney, Amazon Prime, you have a lot of different companies that are offering their own services. So what does that mean? Disney is doing the same too. That means they're taking all their content that they probably had on Netflix before and pulling it back and putting it on theirs. Netflix already lost Friends. They already lost Office, or they haven't lost it yet, but they're going to be losing it. And those are the two most watched series on their website. So I mean, it's a problem for Netflix. Having just spoke of Amazon, let's go ahead and talk about the chart of Amazon. Down over 2% today at one point. It's finding some support at the 20-day moving average, and now it's trying to bounce higher. And there's some reason to believe that could hold, as the 20-day moving average back in April and May did hold up pretty well back here in April and then again in May. So there is a little bit. I mean, of course, it sold off in May, however, and it broke through the 20-day moving average, but largely that was because the market was selling off so hard at that time too. So that was really more because of the market conditions, versus it just being solely on Amazon's shoulders for that. So yeah, let's see how it holds up. I think against kind of like the broader market, if it can't hold this area, I think it pulls back to the support level and see if it bounces there. IBM reporting earnings. It's just been taken off today. I really hate holding this stock through earnings. I don't do it. I hate holding any stock through earnings. I don't do any of that nonsense. But you can see this was a pretty big inverse head and shoulders breakout. It broke out a couple of days ago. So if you did have the guts to hold it through, it's playing out perfectly. It really is. I think going forward, target 154. After that, target 162 if it can break through that 154 level. It's a bullish chart. It's a bullish chart from a long-term perspective. This pattern took a long time. IBM is not typically a stock that really makes big moves. So you got to have a little bit of patience. It's not really going to be a one week trade or a few days trade. It's going to be one that's going to take some time to develop, and you're going to have the market conditions going in your direction and favor as well. So keep that in mind. Microsoft, one of the best companies, or stock charts at least out there, one of the largest ones at least. Long-term trend line off of the December lows still intact, has been pulling back below the 20-day moving average. This is causing some problems for the software stocks right now. 3-day pullback, but it's been one of the best stocks. It's still trading at its all-time highs, and I can see where it could come back down to this 129.50 level and then bounce off there. If it does touch that, that's definitely worth buying. I mean, you want to be a buyer at that level right there. Right now, I don't see any reason to buy it. It's consolidating over the last 2 months, 1.5 months maybe. But it's not really gone anywhere. It's just trading sideways. You don't want to get stuck in one of those sideways patterns. So either trade it on the breakout above 140, which I don't even really know if that provides a huge risk reward there. It's such a big company. You may get 3 or 4% off of it, which isn't bad, but you kind of want more than that going into the trade. If you have to settle for 3 or 4%, fine. But you kind of want to think that there's more like 7 or 8% upside if you were to play that breakout. However, if you wait for the pullback to this rising trend line, you're going to have an opportunity to get it at 128 and maybe sell it at 140, and then you get that 8 to 9% return off of it if it just returns back to all-time highs once again. And of course, the stock that everybody likes to talk about, Beyond Meat, I've yet to buy this thing, but I will tell you this: that's kind of an intriguing coil pattern that's going on there. I mean, if you were, I'm not going to do it. I'll just say that right now. But if you were to play this, you could get in on a break above, I don't know, 174, because if it breaks above 174, there's a good chance it's probably going to want to test those 200 prices that was posted back in earlier this last month. There's not a lot of price history there. I mean, you can't really draw a trend line on this thing. I mean, maybe, I don't know, but not really my kind of trend line that I like to draw. Here you go. There's a trend line for you. It's pulling back to this. Maybe it pulls back to this trend line here, and then it pops from there. I don't know. I'm not a huge fan of BYND. I think it's a fad thing. I think everybody's wanting to get in on it. I think I said this before. Everybody was wanting to take their struggling companies and say they were going to start mining for Bitcoins and everything. Now you got stocks like APRN that are like, well, we're going to do the same thing with Beyond Meat. You know, I don't even know what the news was exactly. They did something with Beyond Meat, but anyways, you can see the stock jump like 75%, and now it's been pulling back. And you'll probably see some of that with other struggling companies. Apron. It stinks. Don't go chasing that sucker. But yeah, Beyond Meat above 174, maybe it goes to 200. You have a support level here on this slightly rising trend line. Maybe you put your stop loss below that around 162.30. It's too much of a range for me. I'm not going to trade it. I don't like that kind of risk on my own personal trades, so I'm going to pass on it. However, getting my teeth kicked in by Square today. This one's been a real joy. It started breaking out earlier today. You can't really maybe see what I was seeing earlier today, but this candle here was kind of nice. I actually got into it yesterday. I day traded it, got out for like a 0.3% gain. I didn't like how it was selling off into the close. I said I wasn't going to hold it. The NASDAQ tried to rally, early on this morning, and it showed signs that it was just going to bounce off of the lows, fill the gap, and maybe push higher. SQ was following in its footsteps. It was up over 1%. I bought in at, do I even want to say $82? I got in at $82. And yeah, I've been scorched ever since. So that stinks. 80.30, my stop loss. It's like 79.71, I think, is where my stop loss is. So I'm not too far from it. For this video, I might even get stopped out of it. That's okay. It's a tight stop, whatever. But a little irritated by it. I mean, they say as traders you're not supposed to have emotions. You do have emotions. You're a human being. You're going to have emotions. So you're not going to like getting them stopped out of a trade. But I think as you become more of a seasoned trader, you become more accepting of the fact that you get stopped out. It doesn't have to ever be something that you actually like, but it's something that you come to expect as a trader. Yeah, I'm going to make crappy trades like this. And this was a crappy trade. I chased it early on this morning. Thought at 82 this thing was probably going to go and probably push through this 83 level here. There is some resistance overhead. I really thought there was enough momentum in it this morning to push it right through that. It didn't. It pulled right back through it. So here's the thing. It pushes through that 83 level. This thing's off to the races. This thing's going right back to 100, I think. And there's little resistance overhead. And so that's what I was playing. if I can still hold on to this without getting stopped out before the end of the day, I'll probably hold it overnight and see if we can't get a gap up and for it to do what I originally thought it would do when I bought into it. So EOLS, this is one that's trending on StockTwits today. I mean, it's not bad. I mean, it's a pretty chart, nice little rounded bottom here. You can get in if you were able to yesterday at 1780. You're sitting on some huge gains right now. I don't think you chase this right now at this point. The Stokes are at 95. I think it's so overbought right now that, I mean, it's only had like 2 down days in like the past few weeks. I mean, let this thing cool off. It's got a gap here that hasn't filled. Maybe it fills that gap, goes up to 21.45, and then starts to pull back. But this one has a pretty wide trading range, so you want to give it some space to pull back, perhaps give you a little bit better entry price, and then you can get long on it. But right now, I wouldn't go chasing this one. I mean, it's definitely one worth keeping an eye on. If it does rally further from here and you want to still get in, I'd watch the 23 level. I think that is some serious hardcore resistance overhead that could reject the price. That's going to do it for today. Check out the Swing Trading Splash Zone. Free 7-day trial if you like it. And I'm in there every day trading. You get crappy trades like sometimes like I did today. And SQ, I don't think that's the best plug for my service, but that one's really gnawing at me though for a little bit for some reason. But SQ's actually treated me pretty well in the past. I'm net profitable on that trade. It's just that today just kind of irritated me. But yeah, no, plenty of good trades though. I mean, now earlier this week, symbol NOW, ServiceNow 7% made on that one. Twitter made a couple percent off of that. You go back into last month. I mean, some really good trade setups there. Yes, you get a bad one, but the difference is I contain the risk. I don't let risk get out of hand. I don't let it kill my portfolio. If I'm wrong on a trade, which I will be from time to time, I suck it up and move on to the next one, but I don't let myself get destroyed by it. If you're into transparency and honest technical analysis and getting all my trades real time via WhatsApp, text, email, also in the chat room, then definitely sign up, check it out, and I think you'll really like it. I really do. It's a good service, and I'm putting out their trade ideas all day long, even if I'm not even trading them. I'll still put out trade ideas so I don't just like stop analyzing just because I'm not trading anymore on the day. I'll still put ideas because everybody has a different strategy. So they want to be able to have more and more ideas. They want options. So it's not all about me. It's about really trying to identify good trade setups, managing the risk, and profiting from the stock market. All right. Thank you. Have a good weekend. God bless. Thanks for watching. I hope you enjoyed the video. Please be sure to like and subscribe to my channel, as well as check out some of these other cool videos that I've done. And if you want to swing trade with me each and every day, you can do so by going to www.shareplanner.com/splashzone. Thanks and happy trading.